inflation doesn't look good. None of this really looks good. Interest rates obviously going to have to go back up, I would assume. What's your take on all this?
Well, first of all, I also called all the inflation that we're experiencing, and it actually has its origins to the 2008 financial crisis, because what the government did in response to that crisis, QE1, QE2, QE3, all of that, plus what we did during COVID, that is the source of all this inflation. And it's going to continue to get worse as long as we continue to run these massive deficits. We're running a $2 trillion a year and rising debt. And this is going to lead to much higher inflation in the future than what we've experienced in the past. And I think that the decline in the CPI is over. We bottomed out 2 months ago at 3% year over year. Now we're at 3.7% and rising. And I think inflation is going to be a much bigger problem in 2024 than it was in 2023.
Okay, Peter, my issue with all this, well, I have many issues with all this, is it seems like it's an inevitable death spiral because they're not going to stop spending. None of these idiots, Republicans or Democrats, can stop spending. So they're going to keep printing money. They're going to keep spending money. So inflation keeps going up and CPI keeps getting worse. And that means interest rates get... Now, am I getting anything wrong here? How does this turn around?
No. And in fact, the spiral actually is worse because the increasing interest rates actually contribute to the rise in the CPI, because interest rates are a price, and it's a very important price for a lot of companies. Just like labor and rents and raw materials, companies borrow money to conduct their business, to make capital investments, to expand. A lot of these companies have taken on debt over the years, and now the cost of servicing that debt has risen sharply. I think it will continue to rise. And so businesses need to pass on these higher interest rates to their customers in the form of higher consumer prices. So every time the Fed raises rates, it puts more upward pressure on the CPI.
And people make less money. We know now the household income fell by 2.3% in 2022. That's the lowest since 2010. So not only is everything more expensive, people are making less. So Peter, how does this end? Well, how does this story end? Let's assume they're not going to change their behavior. That's a very safe assumption. What does this bubble pop look like when it comes? Is it going to be like 2008?
Well, the story is going to have a tragic ending, unfortunately. We're going to have a dollar crisis and a sovereign debt crisis. The Fed is going to print money until the dollar collapses. And I think that day of reckoning is at hand. I mean, I don't know that it's tomorrow, but it's coming sometime soon, because you can already see the world is trying to divest itself of the dollar. There's a big movement to look for alternatives to the U.S. dollar, and they're there, and that's happening. And we've been able to get away with creating all this inflation because we've been able to export our inflation to our trading partners, who have replaced the money we print with the goods that they produce, and that's kept a lid on consumer prices. But as our trading partners move away from the dollar is going to fall very fast. Prices are going to rise much faster than they have been. And at some point, it's going to spiral out of control, especially the debt, because we have so much debt. And as the interest on that debt really rises, then it puts even more pressure on the Fed to print even more money, to buy more bonds, to put some kind of cap on how high interest rates go. And it just accelerates the cycle, because what's driving everybody out of dollars and out of bonds is inflation. And if the Fed has to create even more inflation to stop interest rates from rising, it just creates an even more powerful incentive for everybody that owns treasuries or any dollar-denominated debt to sell it. And then it pushes down the price, rates go up, the Fed has to print more money, and it ends in a currency crisis. That's where we're headed.
Peter, can you explain, you mentioned the alternative to the dollar, and you obviously just broke down a little bit what that would mean for us. This BRICS movement, it's the biggest one that at least I know of right now, this alternative to the dollar. How far away are they? I understand this coalition of countries is no joke. Obviously, China, India, Brazil has got a big boy economy. But how close are they to making this BRICS thing a reality?
Well, I don't know how close they are to the actual launch of some kind of new currency that would likely be backed by gold. But ultimately, gold is the biggest threat to the dollar. That's what's going to replace the dollar. as the primary monetary reserve asset. The dollar replaced gold, and so gold is just going to take back that mantle. And in fact, the main reason that the dollar was able to supplant gold was because it was backed by gold. It was redeemable in gold. So the world accepted dollars because they were as good as gold. Well, that's not the case anymore. That hasn't been true for over 50 years. The dollar is just a piece of paper. And so I think the world is going to go back to real money as the basis for the monetary system. And all of these fiat currencies will be legitimate currencies again because they will be backed by real money, which will be gold. And that's going to level the playing field. But it's going to be very difficult for the United States because we have grown accustomed to the role as the creator of the world's reserve currency. That's what enabled us to live beyond our means for all these decades. It's what enabled these huge trade deficits. It allowed our economy to evolve in the way that it did, so that we have this consumer-based spending economy that can't really survive without the rest of the world propping it up. And that's what's going to stop. The world is not going to prop it up anymore because it's going to move beyond the dollar. And this whole artificial economy that has been built on that foundation is going to come collapsing down. And we're going to have to reinvent our economy from the bottom up. We're going to have to go back to saving and producing. And if we want to consume, we got to produce something. If we want to borrow money, some other American is going to have to save it. We're not going to be able to rely on the rest of the world to produce the stuff that we consume and save the money that we borrow.
Peter, historically, is there some country we can look at who went through what you're describing right now so we can have some understanding of the tough times we have coming for us? Because you make it sound like we've got zombies coming over the walls.
Yeah, well, you can look at some of the experiences in Argentina. They've had serious inflations, devaluations. They've had to deal with it. I mean, you can look at, examples like Zimbabwe, what happened to their currency, or in our hemisphere, Venezuela. You can see what's happened there. If you want to crack open your history books, you can go back to Weimar Republic, Germany, and see what happened there with the Reichsmark. I mean, there are countries that have experienced it. You can go back even further to France with the Astyanates, and the popping of the Mississippi bubble. I mean, you can go back in time and look at historically how nations have dealt with runaway inflation, hyperinflation, but it all starts the same way. It's debt. Governments build up tremendous amounts of debt. In the case of Germany, it was because of reparations from World War I. But we built up this debt just paying Social Security, Medicare, national defense, all these things that we've spent money on over the years, over the decades. We've borrowed. We haven't collected enough taxes from Americans to pay for the spending. And so we've built this $33 trillion debt mountain. And that's just the tip of the mountain, because there's a lot of debt that is unfunded that we still are obligated to pay. Again, Social Security, Medicare, guaranteed pensions, bank accounts, student loans, brokerage accounts. The U.S. government has co-signed a lot of liabilities. And when you add that all together, you're talking about hundreds of trillions of dollars. It is completely unpayable. And historically, the way governments get out of the situation is through inflation. They just print away the value of their liabilities, but they destroy everybody's savings and everybody's paper assets and their wages in the process.